take calculated risks in your business, because the thing that'll kill it is inaction. Businesses that can't take actions are the ones that fail. Businesses that keep taking action, whether it was successful or not, are the ones that succeed. So it's the lessons we learn when we fail that are the best lessons learned and propel us to success. It's not success over and over again.
Welcome to the Power of the Tribe Network and Rising Star Book Club. My guest today is Debi Corrie. She is a CPA, financial strategist, and author of Loving Failure. It is an entrepreneur's, it needs to be an entrepreneur's tool belt. It is the financial strategies of not only how to become successful, but to keep you successful. And it's having a best friend as a financial strategist. And anyway, so I'm going to bring her on. Debi, welcome. And yay, so glad to have you.
I'm so excited to be here today and talk about my favorite topic, which is numbers, which, entrepreneurs never want to talk about numbers, right? We want to talk about the fun stuff like marketing and sales and numbers. What good are numbers? And that's why I wrote the book, because I wanted to, first of all, catch people with that title. What did you think the book was going to be about when you saw Loving Failure?
Okay, so that's so funny, is that when I do a tremendous amount in the inspirational, transformational space, right? So naturally, and again, Loving Failure, Failing Forward is another great piece for entrepreneurs, because that means you're only then growing faster. Mm-hmm. So I thought it was going to line in that, which I thought was going to be great to begin with. It was so much more, and it was not that. So that's where I thought we were coming in.
Yeah. And so I've learned over the years, I've been doing this for 34 years now, I guess, that business owners, they don't want to talk to their bankers, their insurance people, or their finance people, right? So I was like, how do I title a book to get people's interest, right? So I could get them into this story and pull them in, and then get them interested in learning more about this topic. And so I wanted to get a title that would hook you, and you'd be like, what is this about, right?
I already had you as brilliant after reading the book. But okay, you've just went up further in the whole brilliant, because that's exactly it. It's a very captivating title. And yeah, so, and again, yeah, okay, brilliant. So let's get into the why you wrote the book, who you wrote the book, and how their life unfolded, and then just had you step up into this work for other entrepreneurs.
Well, it was all because my grandpa, he was a World War II vet, and he served in the Navy as a cook on a ship. And when he got out, he did what a lot of young men did. He apprenticed to be a plumber. And he, looked around and he said, hey, I could do this. He hired a couple guys, had a thriving business, did very well. He owned his house. He had a cottage on the lake. He owned his shop. He'd done very well. So at 62, he announced to the family he was going to retire. And we're like, oh man, that's great for Grandpa, right? He's going to retire. Well, there were some things we didn't know that Grandpa thought was going to happen. And the first thing was he thought he'd be dead by 65. And so for people that don't understand, my grandfather grew up during the Depression. And when Ben retired at 65, they were dead in a couple years. That's just the way things were back then. So my grandfather literally thought he'd retire at 62, be dead at 65. He wouldn't have to worry a lot about money. And by the way, in that 3-year period, he was just going to live on his Social Security. Well, there were a couple problems with that. My grandfather didn't always file a tax return. And when he did file a tax return, it was at a loss. Well, your Social Security is based on the earnings you report to the IRS. So if you're not reporting earnings or you're reporting losses every year, you're getting the smallest amount that Social Security is going to pay out, which you can't live on. So here's a successful man, owned, this business his whole life, is going to retire, is going to live on Social Security. My grandfather lived to be 82 years old. And by the time he died, he was awarded the state on Medicaid and had lost everything he had worked his entire life for. He had nothing left. And my grandfather had choices. He could have rented out that shop. He could have had a couple guys work for him still. He could have sold his client list. He could have done so many things, right? But he didn't know he had options because he didn't understand what he could do. And so that's why I wrote the book, because I feel I've seen this happen. Other entrepreneurs, they retire and they don't plan for the future. And that's one of the things that, I help people do. And when the pandemic hit, my grandfather's story really hit home because I saw so many business owners suffer because they hadn't planned for that rainy day, or they didn't have cash set aside in their businesses for a time of economic downturn. And I just felt I was compelled to write the book and share my grandfather's story so that it could help as many people as possible.
It does. So that the book is just really, really supportive and eye-opening. And it gives you, again, it's like having a best friend as a financial strategist. So with that, then when there's almost a paradigm shift here in the book from what, traditional CPAs will advise, meaning, bring down your revenue as low as possible to not incur taxes, or as least as possible, right? That's a normal strategy. Buy that equipment at the end of the year. This way you can. And so within that you and I want you to lean into what that looks like as opposed to how you would advise entrepreneurs. And then is there been a battle then with shifting to this actually more stable as well as more illuminating the numbers?
So I think it's a paradigm shift for many business owners because they don't understand the implications of tax planning. So I don't advocate like paying the IRS tons of money. What I do advocate is good tax planning and making sure you have strategies to have cash and have things for a rainy day. So when you look at what a true tax accountant does, they do a great job, right? They make sure we show as little money as possible on our tax return, and we pay as little taxes as possible. Well, what a lot of people don't understand is that tax return is used by bankers and outside sources for financing. So I know there will be entrepreneurs listening to this story and say, oh man, when I went to the bank and tried to get my home mortgage, they put me through the ringer, right? Because they're like, where's your cash flow going to come from? Your tax reporting is part of your income statement when you go to an outside resource. So there are ways to make money and have money in the bank, right? And still make payments to the IRS that are reasonable. There's all kinds of tax planning strategies. And so one of the things that business owners don't understand is they don't need to talk to their tax accountant just about they don't pay a lot of money in taxes, but what are their future plans? If you have a big dream of going to the Bahamas and retiring, you can't do that if you don't have any cash in the bank and you pay zero taxes every year. So, sharing what those big vision goals are so that you can balance your tax bill with what your finances need to look like to fulfill your dreams. That's what we help people do.
And I love that because you're bringing in vision and your resources and aligning that. So
right.
That's just so supportive and so it's clarity.
Yeah. And, I tell people, if your tax account isn't asking you about if you've opened an IRA or a 401k for your business or, some kind of retirement planning, and they're telling you to go out and buy equipment, you might want to get a different tax person because you can reduce your taxes with that and then have money for the future. So if you don't need that truck and they're telling you to go buy another truck, that's just not a good strategy.
Okay, now I'm going to go into another phase of this that I also thought. So you go in deep about cash flow and how important cash flow is. Can you lean into that a little bit and how that's actually the lifeline of a company and its health, financial health?
Yeah. So a lot of businesses base how well their business is doing on sales, and sales are really important, right? If you don't have sales, you can't generate cash. But just as important is what, how much money do you have at the end of the month after all those sales? Where did all that money go? So you can have a company that has, great sales, but at the end of the month, they have a negative balance on their income statement. The balance on the income statement basically is the cash that's going in the bank for future days. So if that balance is always negative, that's not good for the company, right? That means they're losing money every month. So it's really important to keep an eye on those expenses too. What are the expenses associated with those sales? And especially for growing companies, it's so easy to lose track of what we're spending and how things are going, because a lot of times we're throwing people at problems and not really seeing, how that's affecting our books. Or, maybe we didn't price things right. It's time to have a price adjustment. Maybe we were afraid when we first started, so we priced low, you know, and people are like, well, how can I price higher? I price low. Offer packages. This is, this low price you have, that's your low package. Here's your mid package. Here's your higher package. There's all kinds of strategies to do that, but your profit is your cash. And then you might have a business owner that says, well, I have a profit every month, but I never have cash. Well, we forget to look at this thing called the balance sheet. And I call the balance sheet in the book the black hole called the balance sheet because nobody understands it, right? They're like, we got this report over here. I'm not sure what the heck it means, right? My accountant tells me to look at my balance sheet. What the heck is on that? So in plain terms, your balance sheet has future collections from your clients, how much cash you have at the bank, and how much equipment you own, basically. Like if you bought your building, it's sitting on there, or if you bought computer equipment, those kinds of things. Those are your assets. And then it has this thing called liabilities. And the first rule to remember is you always want more assets than you have liabilities. So sometimes when you look at that balance sheet, you'll see that your liabilities exceed your assets. You've got an issue going on. That means there's probably something going on with your cash flow. And, maybe it's loans that are sucking up all the money on your net income line. And that can be a big problem. So, you have to have a balanced picture when you're looking at everything for your books. And so a lot of times we focus on the income statement and we're like, oh, yeah, it looks great, doing great. But we forgot to look at this little thing called the balance sheet. And that is like key to knowing how the cash is flowing through your business. So, and I tell business owners all the time, you don't have to understand both. Get an expert that can walk you through what's going on with those reports. You just have to understand it at a high level, just like I talked about. Have more assets than you do liabilities, because that means you have a positive net worth, right? And then make sure at the bottom line of your income statements, it's positive. Those are great starts.
You mentioned the word loans, right? And I love this piece with I actually assumed he was a manufacturer, she was a manufacturer, but there was a client that just got a really big account, right? So they were going to they wanted to get a line of credit to manage that as they were working towards fulfilling that order and what that looked like. And then they got the line of credit, said, good. And then let's exceed that and go further. Right. And then wanting to tell a story about what happened, and particularly manufacturing and importing, what that looks like.
I had a client that was really growing, and they had a great banking relationship, but a very small line of credit from the bank. And we had just gotten a huge purchase order in, and she's like, I can't finance that. I said, well, we're going to set up a meeting with the bank like yesterday. And we're going to talk to the banker. We're going to share this great news about this new purchase order, and we're going to get an increase in our line of credit. She's like, well, they won't do that. I said, I'm telling you that they'll do it. We'll sit down. We'll talk about the customer. So they did. We got the whole thing done in about 2.5, 3 weeks. Well, we get the order shipped, and this new client, there were some problems. It was the first time with a new client, right? Very typical. And so they withheld payment until things got straightened out. Well, think about getting a huge order in your company. You've spent all this money, and now your client withheld payment. What if they hadn't had that operating line of credit? They literally could have gone out of business, right?
Yeah.
but they were able to navigate the whole thing safely because they had that line of credit. So, business owners a lot of times are loan adverse, and you just heard me talking about having too much in loans. You're like, well, Debbie, you just said loans were bad. That's not what I said. Loans could be used very wisely in businesses to help you navigate cash shortfalls, to, do buildings, right, where you've got property. But loans should be attached to things that help you either grow your business or create equity for your business. And so you just want to make sure when you make those loan payments that you've got the cash flow to pay them. That's all. And loans are a great way to make sure that you have good cash flow, because instead of paying cash all at once, you pay it over time. So you've got more working capital, more cash to use in your business. So loans can be very, very effective as long as they're used wisely. In this instant, my client was so grateful that we had, rushed to get this loan done, because they're like, what's the hurry? And I said, we just need to get this done now. I said, because you never know what can happen. And that's what those are for, rainy days. Lines of credit are your loans for rainy day, short cash flows.
So, and going into loans again, there was also the discussion about where you go to a bank and they say no. And so then the aversion to loans or not qualified sets in. Can you open that up a little bit? And
yeah.
What was this?
So
yeah,
I'm going to do this big secret that banks don't do. Okay. And so what it is they don't all like the same businesses. Did you know your banker only likes certain businesses? So you may go to your banker, maybe you're a construction company. I'll use that because a lot of times they have a hard time finding a good banker. And there are banks out there that love construction companies. You just have to find the right banker. So I had a construction company and they're like, Debbie, we're not bankable. The bank told us we're not bankable. And I looked at their books and I'm like, well, you're bankable. Your cash flow is positive, got good assets on the books. I said, tell me what they said. Well, they said they weren't going to give us any more money. I said, well, that just means you're not the right type of loan for them. I said, let's go to some different banks, because here's the secret bankers won't tell you. First of all, you have to go get your loan before you need it, because they want to know that you can pay it back. So you can't wait till you need cash to go to the bank. All right, now I'm going to say that again, because I know that just blew a bunch of people away. Okay. So banks aren't in business to give you loans when you need it. Banks are in business to get paid back. So you have to go to the bank, get loans when things are good in your business, because that's when they'll give you money. That's how it works. That's why you get your line of credit when you don't need it. And then the second thing is you could go to the right bank and get lines of credit that you couldn't get at your current bank. So just because a bank turned you down doesn't mean you're not bankable. It just means they didn't like the risk.
So then you're basically saying it's kind of like dating. Not everyone's going to like the kind of business you have, that you go and find another bank.
That's right. You just go get a different one. So it's really important to have a good banking relationship. When you find that bank that loves you and your business, you want to be talking to them in good times, telling them how well that you're doing and what things are going on in your business. Because when there's a bad time, and there will be, every company has them, you want to make sure you've got that bank on your side, because you kept them informed about what's going on in your business. And that relationship you have with your banker is super important.
And again, all banks, just like businesses, there's a fit. There's a size, and
right.
One size fits all.
Right. It's exactly true. I mean, think of bankers like your friends, right? You don't want everybody to be your friend. Well, bankers don't want every business either. It's the same kind of thing. They want to have the fit that works for them.
So your book, right? So every CEO, every operations, absolutely gets to read this book. And then how often should they revisit it? And how should they implement it?
Well, I think it should be revisited at least twice a year. I think there's some really good things in there. And then I think a way to implement it is to start just a little bit at a time. It's got tons of strategies in there, and not every strategy is going to work for every business. It's meant to get business owners thinking about how to think differently about numbers and how maybe some things can apply to them. But I think just pick 2 or 3 things from the book that you want to try at a time. The rule of 3, anything over 3 kind of gets overwhelming. So, start with making sure that you get monthly statements. That's the number one thing I advise business owners. Make sure you're looking at your numbers monthly, because quarterly or yearly, it's too late to make any differences or changes in those numbers. They're done. So look at your numbers once a month, see how you're doing, and then make adjustments. If you're having negative profits, you need to take a look at your expenses and take a look at your sales. And I always say, look at sales first. People like to slash things when businesses aren't doing well, and they tend to go to marketing first. And I'm like, please don't do that. Marketing is your lifeline, right? You need to look at either how to increase your price. That's like the fastest way to do things better for your business. A price increase will automatically help more money come to the bottom line. And that's missed a lot of times when businesses need help. And then the other thing is, to take a look at your expenses associated with your product. Are there better ways to do that? Are you doing too much discounting to your clients? How is it you're selling? So really take a dive into those sales and see what your actual, what I call the gross profit margin is, and see if you can improve that, because whatever you do there, it drops right to your bottom line. So any work that you can do on that sales price and what it costs to get your goods in immediately has a positive effect on your books.
And it's again, when you're actually strategizing, you're standing in your power and your leadership to ask for more, which will then actually support you even at a time when you may not have the confidence in that to do that.
Right. And it's really funny. I tell business owners all the time, your vendors don't go ask you for a price increase. They just do it. They announce it. By the way, your prices are going up 3% this year. Your employees don't say, hey, you don't have to give me a raise for the next 4 years. I understand we held our price. Your prices are going up every year, just like everybody else. So you've got to have some type of price increase strategy so you don't automatically lose margin every time. So think about it this way. When you don't do a price increase every year, you are actually reducing your net profit every single year you don't do a price increase. You're causing yourself to lose money.
That's just so powerful. And again, it's things that most entrepreneurs, it's all the things that they have an aversion to, which would actually give them power, stability, and helping them to employ others and whatever else they get to do as they stand in this economy.
Yeah, and there's tons of ways to announce price increases too. I mean, one company said, we're so excited, we have these new services that we're going to provide to you, and it's only going to be a 3% price increase to get all this extra value. Think about how powerful that statement is. Yeah. Rather than saying to your customer, by the way, we're down a 3% price increase this year. What do they get for that? Yeah. And by the way, the reason I love numbers is because they're fun. See, I have fun with the numbers.
I did. You are fun coming in, and yes, and I'm looking at the analyze behind the writer of this book, and she showed up in a promoter, so I love it. And polka dots. If someone wants to work with you, yeah, how do they get in touch with you? Yes.
So the same thing, you could email me. There's also a form to fill out on our website at acumaxim.com. Or you can call our office. It's 314-476-4200. And we can have a conversation. So I love talking to business owners and learning what they do and what challenges they're having and seeing if we can help.
Okay, great. And again, with the book itself, it's so supportive to entrepreneurs, particularly in a place that they don't like to go. But when it comes to the health of their business and really peace of mind.
Yeah. And to be able to sleep at night, right?
Yeah. So, and again, I love that your title is financial strategist or strategy, right. Finance, because that's exactly what it is. It's not a knee jerk. It's a being prepared in case anything happens.
Yeah. And you know what? Life happens, right? No matter what we do, life's going to happen. And, one of the things I share in the book, and I know I said at the beginning, but I'm going to say it again, is it's so important to make sure when times are good, you have money set aside for when times aren't. There's got to be a strategy there. And so I think, we have an event that happens in economics every 10 to 12 years. It's just a cycle that we go through. This was a really bad cycle, right? The pandemic was one of our worst, but we have seen so many innovations. I can't tell you how many things I've seen business owners do that they've been thinking about. They just said, "Hey, I'm going to do it now, and I'm going to try it." So, we've changed the way we do business. We've got Zoom calls. There's a restaurant here in St. Louis that actually started a frozen pizza business. We figured out in 90 days, less than 90 days, how to drop freeze pizzas and ship them all over the United States. I know a dance studio out in California, they're only in-house. They now have a whole virtual program for parents that have kids at home and this fun dancing school that they now do online. I know video photographers that did everything in person. And now what they do is they offer monthly club memberships to people like myself to learn how to do video and do it right. So I still have a lot of work in that area, by the way, but I love the monthly, videos. So, think about other ways you can generate income. This is a time of innovation, and it's such a big opportunity for businesses. I really think that 2021 is going to be an amazing year for so many people. I'm really looking forward to what's going to happen this year.
I have to agree with you. And as much as we were locked down at home, in other ways, the whole world has opened up.
Mm-hmm. Yeah.
And when that connection is happening, it's truly magical. And that's where, that's where that synergy through connection, that's what makes this whole piece fun and really powerful. So,
Yeah.
Okay, everyone. Yes. So any last words? Any 3 tips just to take away?
Yeah. The one thing I always tell business owners is don't be afraid to take risks. Risks is how you became an entrepreneur. And sometimes we get too comfortable where we are, right? And we forget about that risk, that first step we took. Take calculated risks in your business, because the thing that'll kill it is inaction, not that you made a mistake. That's what I've seen in my experience. Businesses that can't take actions are the ones that fail. Businesses that keep taking action, whether it was successful or not, are the ones that succeed. I can talk today.
Well, okay. And now you do a full circle of what the title alludes to is that really, entrepreneurs who continue to fail learn quicker.
Yep. And faster. Yeah. So it's the lessons we learn when we fail that are the best lessons learned and propel us to success. It's not success over and over
again. Yeah. And there was the one that you were saying in there, and I think it's in the first chapter about that, the overnight success, and
that doesn't exist. Yeah. Yeah. There's no such thing as overnight success. What you don't see behind the scenes is the 10 years of pain and the hours of struggle and tribulation for that business owner. And the other thing I don't believe in is luck. So especially as women, I don't know how many women viewers we have. Luck has nothing to do with your success. You put out the effort. You were out there to be seen. That's why you're successful. It's about you and your effort.
And your vision.
Yep.
Okay, everybody. Okay, Loving Failure, really catchy title. Debi Corrie, again, AccuMaxim, and any entrepreneur.
Yes,
you need this book. And it's something. It's a working document that really enables you to stay healthy financially. And Debi, thank you for your generosity. Thank you for really standing for entrepreneurs, and thank you for coming on today.
Thank you so much for having me, Maureen. I had such a good time.
Oh, good. Well, there we go then. My job is done. All right, everyone. Till next week. Bye.